Hey guys, Boris from BKT. Our weekly review this week, and let me just start out by showing you the chart of the euro dollar, because this was one of the most frustrating and volatile weeks in the markets in a long time. Look at this chart. You start out the week, you go, which way you want to go? Want to go up? Maybe, boom, no. You want to go down? Maybe, no, boom, up. And then further, the pièce de résistance, the final move, push up. The result of tremendous amount of chatter from central banks. Bernanke comes out here, supports the dollar, drops the floor from underneath it. Over here, Trichet comes out, surprises the market, says he's going to raise rates, pushes the euro up. And finally, NFP's print, the numbers is actually not so bad, but the unemployment rate skyrockets to the highest level since 1986. Boom! We go back up higher. It's a week full of surprises. It actually explains why when you're trading purely on patterns, it can be so maddeningly frustrating. That's why one of the reasons why we always trade on fundamentals and technicals alone. A lot of technical traders I know this week got whipsawed to death because they followed one move only to get killed by the other move, only to get killed by the third move. Anyways, let's take a look at the trades this week because I think there were some interesting ideas here that went down. First of all, euro dollar. We went into this trade after the Bernanke news on the assumption that we were going to get worse Eurozone retail sales. And here's the irony of the whole thing. This is, by the way, I think very interesting to, let me just zero in on this a little bit more. Very interesting for you to know in the future because it has to do with basically some of the key components of how we trade BKT. Sorry, I'm just going to find the right place on the charts here because this is the key thing. Right here, this is the point. We go in here, 54.60. We sell around 3:30 in the afternoon East Coast time. And here's the thing I want everybody to understand. FX is not a centralized market. There is no one price in FX, which is why we constantly use our account as the one price that all the subscribers should be using as a reference point. Not everybody's going to get the right execution because everybody's going to have different brokerage accounts, different spreads. On our account, we went 54.60. We got hit at 54.30. Now, 99 out of 100 times, almost everybody else who follows us is going to get executed at the limits that we're setting, simply because we set the limit usually very short and it's always going to go way through it. Typically, that's what happens. But in this particular case, we got filled and it stopped right then and there. And a lot of accounts just did not quite get filled at 30. A lot of platforms showed 31 but not 30, did not get people done. Which is the reason why we sent out an alert right away. Notice that there was 10 minutes, 20 minutes, 30 minutes, 40 minutes when the whole thing was trading at basically plus 25, plus 20 in the money. Whenever we get done, the rule of thumb is that you should follow us. If you're not executed, go to market and execute yourself to market. Take the first profit there and move to break even. Now, just to make things even more frustrating as the trade went on, we get nicked out at 54.60 on the retrace here. And basically, it's not like the price action does anything else for a long time. It just simply sits there and oscillates for the next 24 hours. Had we been able to stay in the trade, of course, the trade finally disintegrated all the way down here about fully 24 hours after we laid it on. So the trade did work, it just didn't work in our time, which of course is part of trading. Now the second trade of the week was much more interesting and I think in some ways controversial, but I kind of want to take a look at it from both angles. This is the Aussie-CAD trade, and I want you to understand first. We rarely fade the moves. That means we rarely sell tops and buy bottoms, and there's a very good reason for it because most of the times it's really a mug's game. As you notice, this was very much a fade trade. We always want to be joining the flow both to the upside and to the downside. We don't like to be fading the flow. In this particular case, we decided, okay, maybe it's worthwhile to fade the flow because it was so overextended. But as you can see, very often that is not a great idea to do. We joined this trade in Aussie-CAD pretty much at the top, 97.50 on Thursday night. But the trade really falls apart, not because of a technical formation, but really because we're just simply wrong on the fundamentals. Let me just take you to the Aussie-CAD on a 10-minute chart, and I'll show it to you. Here we go. Here's the end of the day. So we're basically coming in right over here at 97.50, right over here. And the trade pretty much stays in this zone. It actually goes a little bit in the money, goes a little bit out of the money, stays in our zone all the way through until the event risk. And here's the thing. Let me just get to the event risk just 1 second. Let me just move it ahead. Okay. All right, so here's the event risk at 7 o'clock. The bottom line is, this trade I really believe would have worked at least for a T1 target had we been correct on the Canadian sales. So Canadian employment. We just simply did not get the Canadian employment number that we were looking for. It was tad bit worse than the market expected. We were looking for a bigger print than the market expected. Had Canadian numbers printed plus 20,000, this probably would have gotten pulled all the way down to at least T1. Would have certainly made it way before the numbers came out. But as it was simply a matter of not getting the fundamentals that we wanted behind the trade, and the trade just didn't work. Anyways, next week, tremendous amount of new economic data coming out. It's going to be very interesting to see if we get a continuation in the euro flow or a reversal. We're going to watch all the markets. We're going to trade hopefully a lot more actively, and hopefully we'll find the setups that work best within our fundamental and technical fusion. This week was a week of frustration, but next week hopefully will be a great week of trading. I'll see you then. Boris Schlossberg for BKT.